High win rate but losing money. Hi, it's Charlie giving you today's video. I'm preparing these videos in advance actually, as it's the summer period. So I've got a message that came through here saying from a trader, my analysis has proven to be great, but I get out of trades too early and take smaller profits. I don't lose many times, but when I do, the losses are greater than my wins. I end up getting growth for a while and end up back where I was 3 months ago. So my progress has slowed as to what it should be. Right, so this is a classic situation here of, banking profits too soon and in relative terms having stop losses which are, quite wide relative to the profits when the profits are banked. So an equity graph for this person can be merrily going along at a nice clip, and then just a couple of trades, and as this person said, and then they're back to where they started three months ago. So unfortunately, this means that the entire approach is wrong. It's as simple as that. You're never going to get anywhere with this approach. What this person is trying to do is avoid having losing trades. You can see it in their type. I don't lose many times, but when I do, losses are greater than my wins. So the problem that we constantly have is traders trying to avoid losing. So what they do is they have wider stops, because yes, it means that they're right more often, so they are correct more often with their trades, but you're just not going to make money like that if the risk reward is too inverted. So what this individual needs to do is go back and look at their overall trade execution, because he's saying, his analysis has proven to be great, but because he gets out too early and takes smaller profits, etc., etc. So what he needs to do is hopefully, if he goes back over those historical trades, that he can see that actually where he got out relative to where potentially he could get out. And don't pick a top when you're doing this sort of thing, because you're never going to get out right at a high. But is he banking just too soon? So that suggests that there's a confidence issue here that that's going on. He needs to use some self-talk here. So he needs to sort of remind himself that actually, this is from someone called Nick. So remind himself that banking the profits here may make him feel good, but actually it's costing him money. And actually that wonderful equity curve that he's talking about, that he can make money for 3 months, that's flawed. All of that equity curve going up is flawed, because he's destined to carry on for that to happen and the equity curve to come back down as soon as he has a couple of the inevitable losers that even with the wider stops are going to happen. So he's banking profits way too soon relative to the size of the stop losses. So he's got to start using some self-talk and do some analysis of his historical trades to say, if he had have held on for an extra whatever 1% or whatever, what would his equity curve now be like? So he needs to go through, and this is why it's really important to journal your trades. So journaling makes it a lot easier to go back and look at them. But even if he hasn't journaled those trades, they're still there on his trading account, so he can still go back and have a look at them. But he needs to, going forwards, use a lot of self-talk. It's costing him money by banking profits too early. And you almost need to use that language. I can't afford to bank my profits right now. As much as I would love to bank it, in the bigger picture, I can't afford to bank it right now, because when those inevitable losses do come, then they just wipe out all of the gains if I'm banking those profits too soon. So yes, I'm in a profitable trade right now, and yes, it might just roll over and stop me out. But you need to be able to put up with all of that in order to get to all of the ones that do go to your targets, and that's what will be making your money. So a bit of analysis going back over all of those historical trades and see what would have happened if you'd have held on for another half an hour, 1 hour, 2 hour, whatever, and that will help give you confidence. That gives you confidence when you're going back over your analysis. You've still got to then transfer that confidence into the real world when you're next taking your next trades, because you get into your new trades and you're still going to want to bank your profits again. So you need to remind yourself, look, I'm doing this just to make myself feel good. That's not right. I will not be long-term profitable if I keep doing that. I need to say to myself, I can't afford to bank this profit. Even if it rolls over and becomes a losing trade, in the grand scheme of things, if I have those ones that I allow go to their profit target, I will overall have a better risk reward ratio, and overall I put myself in a better chance of making money. So like he said on his message, I'm just reading it out here, it's on my phone. Your analysis has been great. You don't lose many times. So what he needs to do is he needs to have acceptance that he's going to have to lose more often. Right? Get that into your head. Otherwise, I'll come around with a sledgehammer and bash that into your head. Accept that you need to drop your win rate. Most likely, because the longer you hold on to a trade for, there's going to always be those trades that some of them just roll back over. So therefore, then they become a stop out. But you need to accept a lower win rate if you are going to be looking for those higher targets, or it doesn't have to be super high targets, just more than what you're currently doing. You need to make an adjustment there. And if you can go through that acceptance of, oh, okay, by holding on a little bit more, yes, 1 or 2 of those trades will end up just rolling over. So I'll have couple more losers in all of that, maybe a few more. He's saying he doesn't lose very often. So that suggests to me that there's plenty of scope. If he's currently, what's the point in currently having a 65% win rate, let's say, if he's losing money? It's pointless. Drop the win rate down to 50% and look for higher targets. So he's recognizing this because he said it on his message. It's just a case of creating a plan of action going forwards, and that would be what I'd suggest. Do some analysis of the historical trades so that you can see for yourself if you'd have held on to all of them. Some of them may not have gone to their higher targets, but would you have then been more profitable by doing that? So you might see the win rate's gone down a little bit, but actually you would have made money. To that individual, Nick, do let me know how you get on with doing a review of all of those trades, and definitely you need to change your mindset towards trades going forwards. It's pointless just banking profits just to make yourself feel good. You've got to see the bigger picture and say, over 100 trades, if I keep doing this, I'll keep losing money. So what I actually need to do is hold on longer for those trades in order to get those bigger profits out of them, and those bigger profits then do pay for the losers and give you the overall net profit, which is what we're looking to do. Hopefully that's of use to you and anyone else who's watching. Of course, today, always some food for thought there. Have a great day.